Hello, it's Doc for the ReadySetCrypto OMNIA newsletter market update for Wednesday, the 29th of April. Big rally today on really pretty good volume so far. There's still 6 hours left in the trading day as I'm recording this, so it's a little bit early in the day, but you can see that we've had a breakout not only from this range, but well above that 8,000 level that we were so concerned about offering overhead resistance. So I think what happens is a catalyst comes along, and I think part of the catalyst today was not so much the halving, but just risk assets are just running away to the upside right now. We're seeing it in the larger markets, and that is drifting over to cryptocurrencies as well too. So everybody is looking for like, okay, what do I buy? Even the small caps are going up in the stock market right now, and they've really gotten nowhere lately. So this is very much a risk on attitude across the financial spectrum, and cryptocurrency, specifically Bitcoin, as we look at the top 10 list here today, is the big recipient of that. So that is obviously big money coming into this. It's not retail money. This is bigger institutional money is looking for a new home. Remember, there's no shortage of money sloshing around the system out there with respect to fiat currency. So it's always looking for a home, always looking for a place to invest and get some yield from. And right now, investing in anything like bonds or any kind of fixed interest rate instrument is a hopeless task right now to get a yield from that. So everybody's looking for a place to get that alpha from. And right now, Bitcoin is a rock star today, up about 12%. You can see the type of move that this is. A lot of these moves that we've had prior to this, where we have these one-day wonder moves, are quite often, it's like a 10 or 15 minute move, and it moves a few hundred points, and that's all you get. And that's not been the case today. We've been into this stair-stepping mode really since very early this morning, at least where I live, Eastern time, and it's starting to get into a runaway mode. And the runaway mode happens for a lot of different reasons. First of all, it can start with bears, which have been, obviously they're camping out up here and just saying, oh, there's no way it's going to get above 8,000. And as soon as they're wrong, that's their sell to open is up here at 8,000. And as soon as they're wrong, all of a sudden they have to buy back the position to close it, which helps further drive demand. Or also you can have bearish positions down in this area that have a stop, which is above 8,000. So in other words, if you set a bearish position and as you set a stop loss up here, well, it's going to fire as a market order, and it's going to be buy to close, further driving things. So this is typically what happens not only to the upside, but also to the downside as well, that when people are on the wrong side of price, they will punch out with a market order, and that further drives the price in that direction. So my first comment is, hey, this is good. This is great start. To me, this is not anything different than another weekly swing to the upside. It might lead to something down the road. We don't know. If we zoom way out on this, if we zoom way out to a monthly chart, and I apologize that there's so much annotation on these charts, but if we go out to a monthly chart, we haven't done this for a while. And if we look at this from a log scale, then this is really still a very bullish scenario, right? So let's get rid of that. We don't need the expected move on here just a second, but this is still just an enormous consolidation pattern. And the price came down here to retest the 3,700 level. And notice this monthly candle that we had for the month of March. It's, for all intents and purposes, a hammer on the monthly chart. Something else to look at is if we actually look at this from a fractal energy perspective. Somebody in the room pointed this out today. Look at the energy on the monthly chart. Wow, that's big time. That's a big deal consolidation. So this could be setting up for something truly massive. If we look at something like this, if we look at this as just a big open wedge, then typically what we look at is the target for this is the open end of this pattern. And that's somewhere on the order of 15 to 16,000. So that's a good sign by itself. Just getting, looking at the log chart, looking at the amount of energy that's on the monthly chart, irrespective of whether we use log or linear on the chart. But this to me looks like an enormous consolidation pattern. And this is what I've been saying really for at least the last year or so, especially since this rally failed, keeping the larger perspective, the larger thesis in check here really does point to higher prices over time. The problem here, and this is what I found with every other huge monthly pattern, you can see something coiling around for months and months and months, and it's got huge energy like this, and you're like, okay, I'm going to take the long entry. And especially with options, you run out of time. It doesn't meet your criteria. The move doesn't happen in the time that you want it to. And then what typically happens is you get bored with it and you quit looking. And it's specifically when people stop looking at this is when it will start to rally. So I just want to warn you ahead of time, like, don't take your eye off the ball, because when this thing finally does break from this massive pattern that we've been in for over 2 years now, it's going to be stunning what we'll see for the upside. Remember, we did some of this work a while back, and we said, okay, if we take this as an ascending triangle pattern, the open end of this really points to something I don't want to get into hyperbole here, but it points to just massively higher prices for this if we stick to the log chart. Okay, if we go down to the weekly chart, what do we see here? We see a descending trend line. So this is really more of like a bull flag. And I can't say that this is a bull flag on the weekly chart. No way. This is more of a bull flag on the monthly linear chart. That's more of a bull flag on the monthly linear chart, which still carries a huge amount of power to it. Let's stick to the weekly chart at this point. The weekly chart it's kind of confused right now because we did have a trend swing to the downside, and now we've swung back up to the upside. So the net result of this is basically nothing. This should, if we tag off a couple more weeks here, we'll start to increase the energy. But right now, I don't see this as being an impediment one way or the other. I do see this trend line as an excuse for people to take profits as the price gets up to about 9,000 or so. And I think we're even seeing that a little bit just today. Now, when we go down to the daily chart, yeah, we start to see that we're completely out of gas on this one. But let's take a look and see how this compares to last spring's unexpected explosion. So we had this horrible into the end of 2018 and the first few months of 2019. And it's hard to believe anybody at all was still involved in crypto at that time. But boom, all of a sudden out of nowhere, like a phoenix from the ashes, here we go. And we had this massive rally that was really from 4,000 up to 14,000, 10,000 point move over the course of just a couple of months or so. And it ended up with this parabolic tail to the upside. Now, I truly thought that we had something going here, but this turned into a big consolidation. And then, you guys know what this has been. Really, the way to explain this is to zoom out to the monthly chart, and that explains everything in terms of the monthly chart was completely out of gas. It's taken it 2 years now, which is, that's roughly about how long bear markets operate, 18 months to 2 years. And this thing is going to be gassed and ready. So as funny as it may seem, a lot of the fact of why crypto was really here based on Satoshi was to get away from this whole notion of money printing and fiat currency manipulation and things like that. And it may end up being a beneficiary of that because all of this fiat money's got to go somewhere. And I've been on the fence about this whole halving thing being priced in. It certainly wasn't priced in last week, but we may be starting to see some people saying, hey, wait a minute, we got this halving thing coming up and there's all this money sloshing around. Maybe we should put some money into cryptocurrencies. So I think that's partly also what's driving some of the price discovery today. Do you chase after this? I would say always no. You don't chase after any kind of parabolic tail like this. Again, we can learn from some of these other moves. You wait for the consolidation, you take the breakout above there. Even if it's a false break, wait for the break, wait for the energy to show up, and then take it in the direction of that trend. So for this to come along, maybe what we're going to do is we're going to see a sideways consolidation underneath this trend line, wait for the daily energy to build back up again, and then see a break above and beyond 10,000. Of course, the 10,500 level is huge right now. So in a perfect world, this is what I'd like to see. And I'll end on this note here, is that we come up here and, you know, these moves are kind of one-day wonders. So consolidate for a good week or so, flag out under this area, maybe even pull back to this channel one last time, and then watch the energy be totally up here. We're going to have all three time frames at that point fully charged up. Watch out to the upside. That is going to be the move, I think, and I think it's going to be above 10,500 if and when that thing does pop. So this is what I would watch for. The caveat here is right now the broader market is pricing in a recovery. The broader market is pricing in people going back to their lives, embracing freedom once again. Again, the market is looking 6 to 9 months down the road at things being, that was just a brief, nasty period of life there, and everything going back to normal. If the market senses that that's not the narrative, then it's going to be a few rough months coming forward from that. That was my original thought too when we saw the crash. We don't get a 36% crash in the broader markets without some form of pain going forward from that. So far, it's not been the case. It's different this time, and it's because of currency manipulation, like always. Guys, that's it for today's report. Thanks for listening, and we'll see you tomorrow.